Hi everyone, this is Matthew Cruz, and I'll be reviewing the June 2020 supply demand report that came out this morning at 11 a.m. The corn production numbers came out at 2.1 billion. That was very close where we were at last month, a little less than what the average trade was looking for, looking closer to 2.169 billion bushels. So still kind of within range, no major surprises there. And the soybeans came out at 585, very close to where we're at last month, and very close to what the trade estimate came in at 577. Quite a bit less than last year, so that's heading in the right direction. We want those soybean stocks to go lower. In the wheat, came in at 983, very close to the estimate and where we were at last month at this time. Looking ahead to next year's estimates, they didn't reduce any of the corn production. Still came in at 3.323, almost spot on with what the trade was looking for, and slightly above where we were at last month. The only slightly good news was maybe with the soybeans that they reduced that from slightly from last month, 405 million bushels to 395. And the trade was actually expecting it to go a little bit higher than that, and so that was a little bit of positive news in the soybeans. In the wheat, we came in 25 million higher than what the average trade was looking for, and also higher from last month's 909 million bushel number. Looking at what's going on in Brazil and Argentina, Brazil soybean number came in, USDA maintained that at 124 million metric tons. And the last year at this time was 119. The trade was expecting a little bit lower number there because we've been seeing some of the earlier numbers coming out from CONAB in Brazil. They're expecting a lower yield, but the USDA is not ready to lower their number yet. So it's still possible we could see another reduction of 1 or 2 million metric tons in the future, but we didn't see it today. In the corn, somewhat similar situation where we're hearing lower yield reductions in Brazil, but the USDA maintained their numbers at 101, and the trade was looking for a little bit less than that. Argentina, pretty close to what people were expecting, 50 million metric tons in the soybeans. The average trade was at 50.6, and in the corn came in at 50 million metric tons. And so very close to what the trade was expecting. Looking at global ending stocks, corn came in at 312.9 million metric tons, and last month at this time, 314.7. So we reduced that slightly, and 320 compared to last year at this time. And the soybeans came in at 99.2. Last month was 100.3, and so dropping considerably from last year's 112. So we are managing to crush those soybeans, and consumption has been pretty good. In the case of the wheat, at 295.8, not much change from last month, a little bit higher from last year at this time. Looking ahead to next year, what to see going forward, next year's crop in corn, world corn ending stocks at 337.9, and very close to a little less, I guess, than where we're at last month, but still quite a bit more than where we were last year at this time. And so they are looking for more corn worldwide. In the case of the soybeans, came in at 96.3, slightly less than last month, about 4 million metric tons from where we were last year at this time. In the case of wheat, 316.1 million metric tons, a little bit more than what the trade was looking for. Last month, they came in at 310. So world ending stocks in wheat were fairly negative today, and that was kind of reflected in the market trade that we'll show you here later. Looking at the corn balance sheet, we lost about 100,000 acres. They disappeared, I guess, from where we're at last month. They reduced the harvested acres by 100,000 acres. and also reduced the yield by 4/10 of a bushel in the corn. And so that's reflected here, reducing production by 46 million bushels. However, that was offset slightly because they also decreased ethanol consumption, um, and so as well as exports. And so ending stocks still, they went up just slightly, 5 million. So we take that 5 million, we add it to the beginning stocks here for next year, looking ahead to 2021. So that's why we see that increase of 5 million bushels here going forward. So it really didn't change much of the perspective. The USDA is continuing to see an improvement in consumption and things going back to normal. The only adjustment that they made, looking out ahead, was primarily these here from last year, reducing the harvested area, the yield, and then exports for this year. So, but still, this number here is 3.3, slightly higher, and so it's quite a lot of corn. If this becomes true, it's going to weigh very heavily on corn prices. So, looking ahead to soybeans, they reduced production here by 5 million bushels in the soybeans, and exports they reduced by 25 million bushels, and so that reduces our outlook to 395 million bushels. So that's definitely heading in the right direction. Um, 2 years ago, we would have been closer to 900. So we've been able to burn through those supplies pretty well here recently. Looking at quickly at wheat, they reduced exports by 5 million. So you can see that reflected here, adding increasing the ending stocks for the season to 983. Taking that 5, we're adding to the beginning stocks over here. They apparently were bullish on wheat yield, and so they increased that by 3/10 of a bushel. They also increased imports by 16 million bushels, and so taking that into consideration, they're overall looking for another 16 million bushels in wheat ending stocks, increasing that to 925 um, out for the 2020-2021 season. This is not quite the close, but we're looking at December corn here, new crop corn. You can kind of see here we've been drifting sideways to slightly higher. We kind of peaked out here in December corn at this 347, 348 area. Right as it kind of hit against this resistance, we've pulled back here, and today we had another good day in corn. It's possible we can go back up and retest this, but the higher we go, we're going to hit some major resistance at this 355 area in December corn. I think we're going to have a real hard time breaking above that. We're going to have something happen with exports, with either China buying or some weather event to make it go higher. But I think it's possible we could get back up to this upper, close to this 350 area. But long term, if things play out, it's hard for me to. There's too much downward pressure here right now, and a lot of the funds are short. And the war of the forecast looking good. If we get anywhere close to that 3 billion bushels, I still think that you can see these prices moving lower. Looking ahead in the soybeans, this is new crop soybeans. Today we kind of had this 7-cent trading range right at this 876 area. We're kind of at the top of the 3 months trading range here, gotten up above 880. There was a little bit of positive news in the soybeans that they reduced the supply going forward, so that might give us a little bit of upward momentum. So if we can get above this 885 area, we could possibly go up and back up to this $9 area. In the wheat, wheat had a bad day 'cause they increased inventories, and so they gave up about 10 cents in the Chicago wheat here, and so it looks like we are possibly going to go back and retest um, the lows here at this 510 area. So if you're a bull, you're going to point out that China still has a lot of buying to do. You're optimistic that they're going to make good on that. You're going to point out that demand is strong and that people are coming in and taking advantage of these lower prices. You can also point out that we're at the bottom end of this trading range, and so that will incentivize buyers to come in and also point out that the economy is slowly opening up and people are starting to travel again and go to restaurants, and that will help boost demand. Um, there's also an argument to be made for weather rallies. Looking ahead, there are some dry spots, and so it's possible that we could get some minor weather rallies to kick in. Um, One thing I'd point out is that the US dollar has been very weak here in the last month or so, and it's given up a lot of ground. And when our dollar gets weak, that makes our products cheaper on the export market. And so our products that we produce look more attractive, more competitive on the export market. And so that could bring some more buyers to buy our grain and our meats. And they also point out that the oil is been slowly working its way back to $40, and so that will um, boost fuel consumption, improve the margins for ethanol plants, and so they'll be buying more corn. Now, if you're a bear, you're going to point out that coronavirus is still here and it hasn't gone away, even if we are opening the economy, and uh, and so it's not going to be a V-shaped recovery. It's going to take a while, be more of a U. Um, and I point out that China has been very slow on making good on any phase one purchases. Talk about the oil glut. There's still a lot of oil, and it's taking us a long time to burn through that. And then, of course, Brazil is still there, and they're looking to increase their acres for next year. And so that is all I have for you today. Thank you for joining me. As always, if you have any questions, feel free to give us a call in the office. It's 712-227-1110. Thank you. Have a nice day.